This line represents the trajectory of Singapore's private housing market, and in the first quarter of 2026, it hit a plateau. While prices crawled up by just 0.3%, transaction volumes crashed by 40% compared to the previous quarter. To understand the weight of that flatline, you have to look back at the post-pandemic recovery. Between 2022 and 2024, soaring prices created a pervasive anxiety, the feeling that you would be priced out of the market for good. Those crowded showrooms where buyers scrambled to secure units have been replaced by quiet spaces defined by slow, deliberate negotiation. This price stagnation indicates a rebalancing of the market's power dynamic, where the frantic momentum of the last 4 years has finally stalled. The 0.3% statistic suggests a transition from a seller-driven market to one where buyers can afford to wait, provided we look at the specific mechanics of supply and regulation that made this shift possible. The slowdown began in earnest last year, with overall price growth for private homes hitting 3.3%, the slowest annual pace since 2020. The primary cause of this cooling is physical. Thousands of units that were delayed or launched during the post-pandemic surge are finally reaching completion. 7,000 private residential units are scheduled to complete in 2026, a significant increase from the 5,200 units delivered in 2025. This influx of inventory is absorbing the accumulated demand that drove the previous cycle's price spikes. When more completed homes are available to move into, the pressure to bid on unbuilt units begins to fade. The 0.3% halt reflects the mathematical reality of supply catching up to demand, which removes the incentive for buyers to accept high asking prices out of desperation. But while the broad average has flattened, that 0.3% figure hides significant activity in specific corners of the market.
Landed homes, for instance, saw a 7.6% year-on-year increase, continuing an 8-year streak of price growth that remains insulated from the wider condo market. We are also seeing developers pivot to the heartlands, with the vast majority of new launches now concentrated in the outside central region to target families and HDB upgraders. This includes the return of the executive condo. After a quiet 2025, at least 5 new EC projects are hitting the market this year. These units act as a release valve for middle-class buyers who were previously priced out of private condos, but still required the space and amenities of a gated development. Capital in Singapore is now flowing toward utility and affordability, leaving the speculative flipping of central city units as a secondary concern. A major paradox exists here. Interest rates have dropped to 3-year lows, with some banks offering loans at sub 2%. Usually, cheaper debt triggers a price rally.
That rally hasn't happened because of the total debt servicing ratio, the regulation that dictates exactly how much a household can borrow. This creates an invisible ceiling. The Monetary Authority mandates a 4% floor rate for loan eligibility, regardless of actual lower rates. So even though monthly repayments are cheaper, your ability to secure a larger loan hasn't improved. This regulatory framework acts as a deliberate stabilizer, preventing lower interest rates from reigniting the price frenzy of previous years. For buyers on the ground, these macro forces demand a change in tactics. The era of rushing to secure any available unit is over. A significant wave of resale supply is arriving, as 6,000 recently MOP'd HDB flats hit the market, nearly double the volume seen in 2025. If you are an upgrader targeting one of the 5 new executive condos, you should secure your financing early, as these specific projects will likely see the highest concentrations of demand. For the rest of the private market, the increasing supply allows for a wait and negotiate posture. With more options arriving, the leverage belongs to the person with the checkbook, not the one with the keys. The 0.3% figure captures the specific moment when the combination of record supply and strict financing finally gave Singaporean buyers room to breathe.